Most people think money is about how much you earn. They believe that if their salary goes up, their financial life automatically improves. But that belief is one of the biggest financial illusions in modern society, because income alone does not determine wealth. Net worth does. Net worth is the clearest mirror of your financial reality. It shows where you truly stand, not where you appear to stand. You can drive a luxury car, wear expensive clothes, and live in a beautiful house, yet still have a weak financial foundation. Net worth exposes that difference. At its core, net worth is simple. It is what you own minus what you owe. Everything you own has value. Cash in your bank account, money in savings, investments like stocks or mutual funds, retirement funds, property, land, even valuable assets like gold or a business. Everything you owe also has value. Credit card debt, personal loans, student loans, car loans, mortgages, and any money you must repay in the future. When you subtract your debts from your assets, the number that remains is your net worth. If the number is positive, you own more than you owe. If it is negative, your debts are larger than your assets. And this is where reality begins. This is why two people with the same income can live completely different financial lives. One person earns well but spends aggressively, upgrades lifestyle quickly, and relies heavily on debt. The other earns modestly but saves consistently, avoids unnecessary debt, and invests patiently. Over time, the second person builds net worth, while the first remains financially fragile. Net worth is powerful because it measures progress, not effort. You might be working extremely hard, but if your expenses and debts rise faster than your assets, your net worth stays flat or even declines. On the other hand, someone making quiet, disciplined decisions can steadily grow net worth without dramatic changes. This is also why net worth grows slowly at first. In the early stages, debt repayment and small savings don't feel exciting. Progress seems invisible. But once assets begin compounding and liabilities shrink, net worth starts accelerating. This is the phase most people never reach because they quit too early. Understanding net worth also changes how you view purchases. Instead of asking, "Can I afford the monthly payment?" you begin asking, "Does this increase or decrease my net worth?" This single shift can transform financial behavior. A purchase that looks affordable today may silently weaken your future. Net worth is not about deprivation, it's about intention. You don't need to avoid enjoyment or comfort, but you do need awareness. Every financial decision either strengthens or weakens your balance sheet. Over years, those small decisions compound into freedom or stress. Another important truth is that net worth is deeply personal. Comparing your net worth to others is meaningless because everyone starts from a different point, faces different responsibilities, and lives in different conditions. What matters is direction. Is your net worth growing year by year, or is it stuck? Tracking net worth regularly creates clarity. It removes emotional confusion from money. You stop guessing and start seeing patterns. You notice where debt quietly grows. You see which assets actually build value, and with clarity comes control. As net worth grows, something powerful happens. Your dependence on income decreases. You gain flexibility. You can take risks, change careers, handle emergencies, and make decisions from strength instead of fear. This is why net worth is not just a financial number, it is a measure of independence. True wealth is not loud, it is stable, it is calm. It is the ability to live without constant financial pressure. Net worth is the foundation of that stability. If you understand net worth, you stop chasing appearances and start building substance, and that shift alone puts you ahead of most people.